Okay, so today we're going to be reviewing HCAC, Hennessy Capital Acquisition, which is a SPAC merging with the EV company Canoo, and we are going to be reviewing whether we should buy, sell, or hold it. The event being the huge jump, as you can see in the past month, it went up nearly 100%, particularly in the last week. So before we decide what we should do with it, we should analyze why this jumped in price so much. So first off, why is it at $13 as opposed to $10, which it was at for a while? I think that had to do with the release of the merger date, which was December 21st. But then, as we all saw on that evening this past week, it went up to $18. And the reason for that was apparently that on Mad Money, Jim Cramer went nuts about it for about 9 minutes, basically saying this is the next big thing. This is the most undervalued SPAC and EV company, Canoo, which is merging with HCAC, and that you should get in Canoo now. And the thing is that what Jim Cramer said in this video was not new knowledge. Everything he said about the company, everything he said was public knowledge. So wouldn't this be a buy the rumor, sell the news type situation? Because he delivered us no new information. Only the price is different. So us who got in early and knew all this, shouldn't we sell it now? Well, there is a reality that someone like Jim Cramer has influence to maybe the average blue chip investor who isn't spending all day on stocks, but wants to put their money in the next big thing, what they think is going to be the next Tesla. And it's possible that he just turned on a lot of retail investors to this, and that's a legitimate thing. And then even though the information he gave wasn't new, it's all true, and it's great PR and information about Canoo, which is the company I'm going to get into. So what Canoo is, there are a couple things that make it special. Basically, it is an EV company, but why it's different is the type of vehicles it designs. It designs these very weird-looking, box-looking vans, which might not be so catchy to our eyes, but I do think the future always looks different than we expect it to. If you look at pictures of fancy cars from the 1920s, I bet they'd never expect we'd be liking cars like this now, right? So I don't pay too much attention to the design. I pay attention to what is behind the company. And here are a couple things. One, it's just, it captures a niche in the EV market that I really like. I think a lot of companies that I also really like Fisker, are trying to sort of replicate Tesla's success to an extent. What Canoo is doing is creating a more efficient type of vehicle for a multitude of purposes, such as a minivan, delivery truck, food truck, those sorts of things. And what also makes it special is the way you acquire them. As you can see at the bottom here, it says join waitlist. I myself jumped into the waitlist in September just to see where I would place in line, and I was more than 10,000th in line, which shows there is some interest. That said, that was in September a few months ago, so I am curious if you do jump into the wait line now, and it is free, feel free to comment below where in line you are, just so we know the sort of traction this is gaining. But that's the cool thing about it, and that's where I think this can be a really popular company and a really popular car. The level of efficiency in the design, the functionality of it, the fact that it can be used for so many different things, so many different purposes, and the fact that it's accessible to the general population in the sense that it's like a membership. Now, is it going to be a cheap membership? I don't know, right? It's very well could be expensive. I heard it's going to be expensive, but it's probably a lot more obtainable to many people than buying a $100,000 Tesla. So the other thing that makes this company special and that Jim Cramer talked about was the fact that they're already bringing in revenue, whereas a lot of EV companies are very speculative, like we saw Nikola was. What he talks about is their skateboard technology, which basically is, I don't know too much about it. I'm not an engineer, but it's apparently a very special technology that is an innovative way of designing EV vehicles. And they have a special way of designing it because they have a great team, which I'll get into. This guy, Ulrich Krantz, who worked for BMW for 30 years. and they're licensing their engineering, their designing of the technology to other purchasers. So apparently, according to Jim Cramer, they are going to have $100 million in revenue next year just off these licensing deals before even releasing a vehicle. And they plan to release the vehicle in 2022. So even before 2022, in 2021, they have all this revenue coming in just because of this special skateboard design here that they're licensing to other people. So let's get into the team very quickly. Ulrich Krantz, like I said, he's in charge of Canoo. He's a chief executive. He worked for BMW for 30 years, designed the i3, the i8, the Z series, World Green Car of the Year. So he has experience in that hybrid EV world. And very important that he designed the BMW i3. Because like I said, a lot of people think the design of Canoo's cars are kind of weird. But if you look at the i3, you can kind of see that shape beginning to develop, this kind of more boxy square / round shape. So I do think he really put his voice and vision into this, and he has a huge influence over this. And as you can see by his past vehicles, he's had a lot of success, so he really knows what he's doing. And if you just look at this team, you look at the people spread out on this team, just key search the word Tesla, you have, everyone's talking about like, what's the next Tesla? What's the next Tesla? Who knows? But this company has 3 people who worked at Tesla. One guy even worked at SpaceX, so he was probably close with Elon Musk in some capacity. Also worked at Honda. This guy worked at Ford, Porsche. Many of these are companies that are also trying to develop their own EV now. And also something important to note is that the skateboard technology that they're developing, they're co-developing it with Hyundai, who apparently poured a ton of money into their development. So this seems like a great investment all around long term. It has a lot of promise. So right now it's looking like a buy, but stay till the end of the video just to find out why I think there are other possibilities about what you can do with this stock and what I'm doing with this stock. Before I say that, let's look at other investors. With these speculative SPAC stocks, I sometimes like to look at the institutional ownership. Before I jump into that, let me not forget that this company just has great PR. Like I showed you the website, it's very sleek, like has ads on the level of Apple, GoPro, like just in level of quality. As you can see, it's been featured on CNN, Forbes, The Verge, Bloomberg, and it's been on Jay Leno's car show, which is crazy. It has over 1 million views. Jay Leno, it's a 40-minute video. He reviews the car, all this stuff. It was on another channel, fully charged. They have over 700,000 subscribers. So the great thing about this is that a lot of people, what drives the price down in a lot of stocks, especially SPACs, is lack of PR. This company has a ton of PR. It has like endless PR. Like it just has PR and ads, marketing on just the level of, these big name companies. So that's what I love. So even if you don't know what's going on behind the scenes with this company, you're still going to get a lot of stimulation of the price just purely on marketing. Okay, so then let's go into institutional investors. What do big institutions think about this? So what's great about this is that it's 50% owned by institutions, meaning that half of it is people who have, serious money invested in this. Now, I will say the other side of that coin is that I've looked at this before, and don't quote me on this, but this is just like based on me monitoring. I'm pretty sure I've seen before that they had 60% institutional ownership. So it's possible that 10% of owners pulled out. And as you can see, let me see in this one. In the red here are all the institutions that pulled out. So I don't know how normal that is. I haven't studied that enough. People pull out of things all the time just to divert to move their money somewhere else. So you don't know what the reason is. But like a good thing is there are a lot of really respected institutions in here, like BlackRock. BlackRock is one of the biggest holders of this stock. Wells Fargo, Morgan Stanley. So you have a lot of institutional backing behind this. So what am I doing with this? If you really believe in this company long term, I say just hold all your shares, right? Like if you think it's the next Tesla, you think everything I've provided with you is great, hold all of it. What am I doing? For me, I personally think it's a little too speculative. Like the thing with speculation with these EV stocks is it all either causes mass fear and everyone sells it, like what happened with Nikola, what we've seen happen with Fisker at points in time. So it either causes people to sell it, or that uncertainty of the speculation makes people feel like, well, this has limitless potential. This could go to 100. It causes huge buying. And then you get yourself in sort of a gambling situation where you don't know where the price is going to go. And I don't want to be in the business of gambling. I came here to trade stocks. There is some like level of gambling, but I don't want it to be fully gambling, whether betting, is this going to go up or down? So I do believe in the company a little. Like, all the stuff I've explained to you is very promising. I just simply don't have enough information to feel like all my money is safe in here. So what am I doing? I think we need to look at this from the point of view of market psychology. Where's the price going to go based on market psychology, based on a lot of people who are probably thinking like me and probably thinking like many of you watching. So in my mind, there are two players in this field of market psychology. There are the people who are panic selling the stock, driving the price down, and there are the new investors, the Jim Cramer type show investors who came in off that news. And the price is going to go in the direction of which wave of investors wins out. And when the price jumped up to $17, $18, that was my question. Where is it going to go? Are the people who are panic selling because or just taking profits because they think it's going to go down scare off the new investors? Well, clearly they didn't really, because it went up to 20. But you have to ask, this isn't going to necessarily go up to 100. Maybe it will, who knows? But there has to be a certain threshold where it's going to get to the point where non-panicky people, just normal people who made a lot of profit, are going to be like, all right, that's enough. This is a speculative play. I need to take profits. And then that's eventually going to scare off the new investors. And so where's that going to be? I think the majority of people in this early on relatively got in the $10 to $15 range, right before it took off probably. And that makes me think that we will start seeing people take profits around the $25 to $30 range. The reason being, like I said, if there's a level of uncertainty with this company, it's very hard to turn down profits when you've just 2 or 3x'd your investment. You've made 2 to 3 times back. Unless you're super greedy, you don't want to test your luck too much, and you want to move to the next thing, the next certain thing. Maybe you want to invest in Airbnb IPO. Maybe you want to invest in DoorDash IPO. I just think, as promising as this company is, like, there are very few people who are thinking this is the end all be all of EV. It's such a large crowded space. That said, because I think there's promise in this company, I probably will hold a few shares, but no more than 5% of my portfolio. So where am I pulling out? I'm trying to preemptively anticipate that $25 to $30 range where I predict people will pull out, and I will start pulling out my position once it starts getting to that $21 to $22 range, slowly pulling out. And then by the time it gets to 25, 26, if it does at all, I will have 95% of my portfolio pulled out. So that's what I'm doing. You have to look at this in terms of where you are with this stock, if you want to go long term with it, how much you believe in it, what you got in, what you want your price target to be. But remember that no matter what your price target is, the stock doesn't care. It's going to go to one price or the other. So you just have to think of it from that perspective. But that's what I'm doing with it. Let me know if you disagree, if you agree, if you have any thoughts on it.